Hey guys, I'm James Tatro and thanks for tuning in to the Southwest Ag Grain Market Update for April 12th, 2018. So last night we had our first shot of April showers, which also brought some warm weather with it, but it doesn't look like that warm weather will last a real long time, as the high for the weekend will be tomorrow at a high of 19, but that will fall down to a high of 1 on Monday with a chance of snow. Our 2-week forecast doesn't look much more promising, as the high for the next 2 weeks is around 11 degrees. So it will be a slow go as we move closer to May. So on Tuesday, we seen the USDA come out with its latest round of supply and demand estimates report, which was more or less a non-event. However, one number that was a bit of a surprise was the 550 million bushel soybean ending stock estimate, which seemed to be a bit too bullish, as USDA said on March 28th that US soybean demand was down 6% from a year ago. If this number holds true, soybean demand will have to be up 8% in the second half of the season just to meet USDA's expectations, which will be a real challenge with China proposing a 25% tariff on US soybeans. What is interesting to see with the ongoing dispute between China and the US is Brazil's increase in soybean price as they move to 11.83 FOB Brazil, only one day after the Brazil's government raised its soybean crop to a record high of 115 million metric tons. That 11.83 happens to be the highest price for Brazil beans since July 2016 and is 43 cents above the price of beans FOB New Orleans. So we would normally expect China to take advantage of cheaper US prices and buy more soybeans from the US. But in the current market environment, China seems to be doing all it can to avoid the US. However, the big question is, how big of a price difference between the US and Brazil does there have to be for China to come back to the US market? But in spite of China's reluctance to purchase US soybeans prices are also showing bullish behavior, especially in the new crop months when China typically relies on the US for soybeans. Also, commercial firms aren't the only ones interested in securing new crop soybean supplies. On Tuesday and Wednesday, Argentina bought a total of 8.8 million bushels of new crop soybeans from the US, a rare purchase from the world's largest exporter of soybean meal. So with all this uncertainty going on around in the market, something to note is 2019 crop beans delivered to the elevator have been hovering around the $12 bushel price range. So if you're a bit weary of this market, don't hesitate to give us a call. At a White House meeting Thursday focusing on agriculture and trade, President Donald Trump said his administration will approve a long-standing demand of the biofuels industry and allow 15% ethanol blends to be sold year-round. Here in Ontario, we continue to see fairly strong export market, even with the Canadian dollar increasing, keeping old crop corn basis values fairly strong for the domestic market as well. We continue to see strong grower selling both new crop corn and soybeans, as values for both crops are at profitable levels. So continue to put your pricing targets in and reward the market as it moves higher. Currently, new crop corn delivered to the elevator is $4.81, new crop beans $12.67, and new crop wheat $5.85. Once again, thanks for watching. This has been your Southwest Ag Grain Market Update. I'm James Tatro, keeping the swag in ag.